Welcome to the latest episode of Sweatin Money. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based solely off of what you hear from this podcast, and always do your own homework and research before investing in stocks. I'm your host, Kong, along with my co-host, Gibson. Let's take a look at what's in the news. So Tuesday, 26th of July, AT&T earnings reports were released, and analysts were expecting AT&T earnings to be up that day. They added about 2.1 million customers, but it was mainly through their Mexico branch. But they also lost a couple, like about 180,000 customers as well. Although that's not as much as what they'd gained. Keep in mind, however, they had continually lost customers in the previous 2 quarters, but the number of those losses this quarter were actually much lower. Now, according to the numbers, AT&T is facing a unique situation. While it's gaining customers, it's mainly from the prepaid crowd, where they pay a lower price, but but they pay every month, rather than the post-paid crowd, which tends to pay a higher price, and they also buy into more services and pay for better phones. So, even though there's a rush in prepaid customers, it kind of flies in the face against this idea that customers who are willing to pay a premium to get better services and better phones are the actual money makers. So this may actually be because there isn't actually any customer service in reality that's offered. Either case, that wasn't necessarily mentioned in the article, but what the article did mention is that these prepaid customers don't require much service and actually saves the company money as well. Any thoughts?
I don't know. I mean, I guess I'll take it to word for it, but I didn't think that it would make a difference with prepaid or paid customers, the level of customer service that need to be offered. In fact, I think they have the exact same issues, right? Like, hey, my phone don't work. Hey, my internet doesn't work. Can't log into my account.
Well, I mean, most of the prepaid customers are not through like the actual AT&T customer or service itself. It's actually through Cricket Wireless.
Interesting.
Yeah. So, so in that case, prepaid customers usually will be at a second tier compared to postpaid customers. So if you're like actually a part of AT&T, you're paying monthly and all that, then your cell traffic actually gets higher priority.
Interesting.
Yeah. Well, in any case, when you're talking about service from AT&T, the CEO of AT&T has said that his company will lead the fight against robocalls, where machines are, calling random numbers with either ads or blank voices, which are merely meant to prove your number is valid and then sold off to other telemarketers. So if you have old people who don't know how to block numbers on their smartphone, or a dumb phone that doesn't have such a feature, this is good news, I think.
Yeah, I guess so. I mean, back in the day where people had to pay for the minutes, then probably this is not something they would have done. But now that unlimited plans are becoming more and more common, if not that's the only thing they have, then the service provider ends up eating the cost. So, of course, they're going to be against it. Makes sense.
Yeah, I didn't think about it that way. It's good. Now, on top of that, though, another thing they announced was earlier this month was the use of drones as cell phone towers. So there's if there's a special event or a concert or some sort, these drones will act as extra towers to deliver the huger load of data, and they'll help direct the calls.
That seems interesting.
Yeah.
How does one differentiate a cell tower drone from a drone about to take your life?
You really don't.
Dun dun dun.
But then, of course, these drones are flying so high, not. Your average human is not going to be able to see it. Yeah,
I'm just assuming that's not going to be the case where they're going to actually stay floating in the air. I think just the amount of run time they could have in the air is kind of limited. I imagine they're just going to plant themselves on top of a roof somewhere.
Probably, yeah. That might be the case. I mean, that would actually make more sense, actually. So, now another thing they had also announced was they're going to purchase a company called FirstNet. By doing so, they can obtain the 700 megahertz spectrum. With the lower spectrum, there's better penetration through walls, and signals actually travel much longer, which means AT&T won't have to install more towers than it needs. So maybe you should switch over to AT&T.
Think about it.
So CocaCola earnings reports also came out, and according to analysts, they're still actually, even though earnings were actually higher than what was expected, analysts are still worried because this year the shares in-store sales dropped by like 5%, or like, well, last quarter they were about 5%, and then they dropped to about 3%. And their sales of carbonated drinks were also much lower. But keep in mind, Coca-Cola has kind of diversified the types of beverages they provide, and the non-carbonated drinks, so bottled water, orange juice, things like that, that's actually seen a bigger boon.
I didn't know Coke sells orange juice.
Yeah, they sold
Fanta, maybe, but
well, yeah, there's two, I think. But yeah, Minute Maid, that's owned by Orange Juice.
Interesting, didn't know that.
Or Coca-Cola.
Coca-Cola.
I should say, yeah. But yeah, so that's pretty much that. Also, on top of that, they're also making some changes to their businesses. Like I think they're trying to split off their the bottling portion of their company. Probably either selling it off or spinning it off into something else. I'm not sure, but that's what I heard. So they're trying to get more and more lean. Now last week on the 22nd, the chip makers Intel and Qualcomm also came out with their earnings reports, and recently Qualcomm's performance hasn't been all that great because of the issues it's been having in China and Korea. I think in China it was due to so-called corruption charges of bribing officials, and in Korea it was involving unfair practices in the country. But then, of course, Korea tends to have a lot more protectionist policies in that country as well. Now, in this quarter, however, Qualcomm has actually shot back up, and Intel, however, has been falling still. So if you look at Qualcomm's dividends, they have never dropped thus far. So I think that's a good sign. I mean,
it's confidence that they're going to be able to recover from whatever they're dealing with right now, and that their future earnings going to be unfazed. That's what a steady dividend says to me.
Yeah, and so I mean that, and now that the whole China thing is behind them, they settled that outside of the courts. I think the South Korean case was also settled. I'll have to double check on that. But anyways, so the Federal Reserves on the 27th announced that even though there isn't a risk to the economy, like they didn't predict another recession was going to happen, they still decided to hold off on raising rates. They said that they're going to wait until inflation starts to come back up. So that's one thing that they're still waiting on. I think within this quarter, there was a bit of deflation actually. So now Chipotle, which is popularizing the whole canteen style, choose your own, thing.
The Subway of burritos.
Yeah, the Subway of burritos, pretty much. Selling the so-called Mexican food. Now, what they're planning on doing is they're going to use this sort of canteen style concept to go into the burger industry. And it's actually going to be a big threat to the guys who used to own their shares, McDonald's, because McDonald's is also trying to do the custom burger thing. And a good example is the McDonald's Next over in Hong Kong in the Admiralty District. And you said that you didn't have a good impression of that, right?
Huh? No, sir. In fact, I might have been served by that exact dude in the picture.
Dun, dun, dun. Oh, well. Now, on top of that, when you talk about McDonald's, a couple days ago, they came out with their earnings report as well, and their shares had fallen 3%. So even though McDonald's actually made some earnings this quarter, according to analysts, they were expecting same-store sales to be at about like 3.4%, but it came in at about 1.8%. So it's like barely over a half of what the analysts had expected. And compared to the growth rate in the last quarter, which was 5.3%, it's kind of making people worried about this this old, 60-year-old business here. Like, can they actually still be relevant in this new century?
Probably, I think. I don't think burgers are going anywhere. In fact, they're time-proven food. I mean, they exist
they're a
forever.
time-proven food, but I mean, like, other people are coming out with, so-called better quality foods. And just as we talked about just now, Chipotle is thinking about entering the business. But even before that, I mean, they're coming under threat of people who know the quality of McDonald's, and they can easily say, like, hey, that's McDonald's is crap. We can provide you just as fast service, but with better quality of burgers.
And the same price? I don't know. I think McDonald's has always been competing on price to a certain extent.
Yeah, they have. But I think maybe at this point, like, people are actually willing to pay a higher premium for what they perceive to be healthier foods. Whether or not it's actually healthy is another thing. But I mean, the perception is that these other foods are healthier than McDonald's, and so they're willing to pay for it.
I imagine a lot of patrons of McDonald's don't eat McDonald's because it's healthy. They're probably just thinking, hey, it'll get you full and it's cheap. So
True.
That's probably the market they're going after. Now, the gourmand burger places, I'm not too concerned with because I think it's a completely different market. You're like, look, we want our meats like about like third, fourth of an inch thick and then medium rare and Angus beef only. And then you go to McDonald's, you specify that, they just look at you like, what? Like, we only serve our patties one way. It's kind of well done, very thin.
Well, in any case, so McDonald's CEO Steve Easterbrook had actually explained why there was such lackluster performance. And he says that people are actually eating out less than they used to. So he's saying that it's not just McDonald's that's experiencing this problem. It's the entire fast food industry, actually.
Entire restaurant industry, if what he said is true, right? If people are eating out less often, period.
Well, yeah, I mean, you and your logic there gets in. But,
flawless logic. You and your logic.
Yeah, sorry. But, well, according to him, he says it's specifically the fast food industry that's being affected. But he didn't exactly say anything about the other parts of the industry as well. But the thing is that this article is saying that more and more people are actually shopping at the grocery stores and eating in. So I guess he is implying that it's the entire restaurant industry as well. But whatever. I mean, the reason for that is because of people's anxiousness over the economy and the political situation. We're not sure of what's going to happen considering our upcoming 2 candidates that we have in the U.S. So because of all these considerations, people are kind of getting worried about their own economic and, their own economic situation, eating out less. And yeah, I don't know. Do you buy that?
I'm not sure because I find eating at McDonald's sometimes cheaper than going out and buying groceries and cooking it myself.
True.
KFC has this deal for $5. You get like 2 chickens. Well, anyways, 2 chickens and like a drink and some potato wedges and like a cookie and some shit like that. I'm like, wow, for $5, that is a really good deal.
Sponsor us.
Huh? Right. Yeah, I'm just saying, for $5, it's cheaper than making anything at home.
Well, hey, on to other news. Ford, America's number 2 largest manufacturing auto manufacturing company, I should say. Within these 5 years, this has actually been the worst in 5 years. And when their earnings reports came out, their shares had actually fallen 8%. So that should be something that we should have shorted if we'd only known.
Well, what can you do? Hindsight's 20/20.
Yeah, well, Google's earning reports also came out a couple days ago, and they had beat analyst expectations. They, according to the cell phones, a lot more. They had actually gained a lot more customers using their search engine, and on top of that, their advertising revenue has also gone up. The only thing that was making people worried was their cloud services and it was actually lower than Amazon's. And on top of that, the other thing that they were worried about was the rise in expenditures for Google this quarter had risen up by 6%. So now when you talk about Amazon, their AWS, according to analysts, has actually they were expected to exceed the Amazon, original business of basically selling things through their marketplace, and it actually had beat that portion. So, the cloud business is a legitimate thing that's bringing a lot of business for Amazon right now. Now, actually, hold on. No, I'm sorry. I got that wrong. No, they actually, it was slightly lower than expected, but it's still increasing, I should say. Sorry. Now, on the whole, however, whether it's their cloud service, their marketplace services, or their customer service line, which is basically Amazon Prime, including their streaming videos and such, when on the day that the earnings came out, on the 28th, their stock had risen about almost 2%. So, on to other news, Facebook is facing America's IRS in an investigation. The IRS is saying that when Facebook had taken their money and transferred it over to Ireland, that it was for the specific purpose of evading taxes. So, in other words, that ambiguity that they may have of whether or not they are avoiding taxes on purpose or not, I guess the IRS is saying, no, you are avoiding taxes specifically, and we're trying to sue
No, we're
you.
not avoiding taxes. We're just hiding money so that we don't have to pay taxes on it.
Well, there's a rule that like the money has to be like what they call within arm's reach or something, and yeah, whatever. So
Global
yeah, there's
arm
that.
reach. Perfect.
Yeah. So, well, here's the thing. The IRS has called them to court 7 times already, and Facebook has not showed up once.
Yeah, courts. Who needs them, man? You don't have to pay any attention.
Well, now
There's
according
no
to
repercussions.
according to Facebook, they said that they haven't been properly served. I'm sure you are very much familiar with this.
Of course. I mean, somehow, whenever you want to reach them, there's no one there to receive the summons. Oh man. Yeah. No, that's not possible.
Well, that's what they're claiming, and Facebook has come out with a statement, however, saying that if the IRS gets its way, that Facebook can be liable for from $3 billion to up to $5 billion US. Now-
Facebook could afford it.
Yeah, well, probably. Now, the thing is that it's not just them that's actually receiving this issue. CocaCola has gotten the same sort of treatment from the IRS lately. And now they actually, I think their amount was about $3 billion as well. But unlike Facebook, Coca-Cola isn't trying to hide themselves in their own shell. So they actually countersued, or not countersued, but they appealed, I should say. So they brought an appealment, and we'll see where that goes. Now, according to Reuters, Deutsche Bank recently came out of the European Union's stress tests. And even though they passed, they were down at the the bottom 10 list of banks. So they didn't actually do too good, even though they passed. However, in their defense, this quarter, they actually made more than they did last quarter. And just like the stress test here in the U.S., there's always new criteria that's being put out. And the criteria is always being readjusted to make sure, these banks are actually, up to par, I guess. So
Makes sense.
And now the U.S. in the second quarter, the GDP had risen up by 1.2%. Now, this compared to Q1, where it was merely up by 0.8%. It's still higher than that, but it's still lower than what analysts had expected. They were hoping for a 2.5% increase this quarter. So everyone's kind of worried about the economy of the U.S. Well, I mean, analysts are, but yeah.
I mean, they're right to be cautious, you know. So, just like the article says, it's the Fed's right to be cautious.
Yeah.
Yeah, it makes sense. I mean, how can the United States still continue to do so well despite the Brexit, the Grexit, the China like economic downturn, you know, Japanese like reverse interest rates and so on, Greece, well, there's Grexit obviously covered Greece and all these other things. How can and Britain's exit the impact of it and the potential impact of it and the question of what's going to happen in the EU and so on and so on. Like, how can the United States still continue to do so well? You know, there's a lot of concern with that. But who knows? It's, you know, there's a lot of that. That's a good question. I think it's perfectly valid. But the Feds aren't too concerned right now. They're saying that the economy is still stable and they don't really have any cause to be extremely concerned right now. Although there are some indications that there are concerns. Well, for example, they're not raising interest rates.
Yeah.
You know, if they are raising interest rates, they're saying, you know what, the economy's doing so well, we need to slow it down. Right now, they're like, you know what, there's a possibility that some of these global events can affect the United States. So we're going to just hold our horses right now and just, you know, keep it steady and just see what happens.
Right.
So, yeah, makes sense.
Now, on some mixed news, the S&P 500 at the end of May had actually has actually gone up. So in the past 5 months, for 5 months straight, it ended up every month, higher than the previous month. That is. Now, if you notice, if you look at the chart here, however, so like after the Brexit, I mean, it just shot back up pretty quickly. But then ever since, it's kind of been zigzagging, and it's like kind of losing steam. So, you know, everyone's kind of expecting this to fall back down at some point, sometime soon. So we shall see.
That's a possibility. But from the Brexit, it's kind of clear, like, you know, people oversold. You know, they're like, oh my God, it's the end of the world. Let's sell everything.
Yeah.
And they're like, oh, apparently it's not the end of the world. And Britain's doing really good now. Wow.
Yeah. So,
shit.
Well, I mean, like if you take the Brexit out of the equation, right? Even if you look at that from the point of the Brexit vote up to where we're at right now. Whoops. Well, hey. Up to where we're at right now, I mean, it's still a very, very, like, shallow slope. It's not all that high. So, in other words, you know, we're still in that same situation where growth isn't as fast as we expect it to be. So, is this a sign that we're only going to grow steadily from here on forth, or is this going to be a sign that we're just going to like start sloping back down?
Well, we'll have to examine the 500 companies that compose this index.
Yeah. Well. So you guys got a sneak peek of this. The Morgan Stanley, there's a Morgan Stanley analyst who warns that for currency traders, according to their predictions, the U.S. dollar will be in for a dip. Recently, the U.S. dollar rallied in the hopes that the Feds would raise rates, but that hasn't happened. Now, as we said earlier, the Feds implied that jobs were looking good, and the only thing they were waiting for was inflation to reach the right level before raising rates. And now they're saying that they're going to announce whether or not they will raise rates in September. So a drop in the currency doesn't mean a drop in the economy, just to note.
Yeah, drop in the currency means a drop in buying power, which will basically just means we buy less stuff. But we might export more things.
Maybe. We shall see. So let's take a look at the week in review. Overall, for the week, the Dow Jones had fallen 142 points, or 0.77%. The S&P, despite what we said earlier about topping off at a gain for the month, well, for this week, they fell by 1.75%, or 0.08%. So it's not even like 0.1%. So it's not that bad, I guess. Now, the NASDAQ, however, gained 61.78 points, which is 1.21%. It's mainly, of course, due to the tech stocks like Google and Amazon bringing them up. So, Monday international markets, we're not going to cover this because we're recording a lot earlier today. Hopefully I'm not going to be late to my appointment. So let's go to the playbook. Now, again, just a reminder, none of the following should be misconstrued as financial advice or investment advice. This is merely provided for documentation only. It pretty much looks like Conoco & Phillips, I'm still down, but not as down as I was before. Disney, still down. Dunkin' Donuts, dude, I should have actually just sold that like last week, man. I was up like 140 some odd dollars. Now it's just, I mean, I'm still up, but it's only like 56.85 now. So,
Yep. Ever since I'm no longer super active in a market, my viewpoint has like been a year or two from now. You think it's still gonna be good, then I think you're fine. Just where it is. Of course, you have to believe in the company. I just strongly believe in Disney. I believe in their direction with China because, you know, if you're going to be a bigger business, you can't just keep yourself locked to one country.
See, I disagree with you on the whole China thing. I mean, yeah, they're going to get some get some gains for the short term, but I'd give it about maybe 10 to 15 years before the Chinese government starts to play something weird and like starts to like shake them down for some money or something.
The Chinese government is getting 60-40. I mean, that's a pretty darn good deal.
Yeah, well, you know, you don't know the greed of corrupt
They're like
officials.
70-30, 80-20. Well, it'll gradually happen that way if it is going to happen that way.
Yeah. Well, but on the other thing, I mean, Square, they're finally significantly back up. I mean, now,
Nice.
you know, making profit off of them. So
Great.
yeah. Now, so your positions, how are you doing with, you still got positions in what?
I'm doing really good in Bank of America now. It's like recovered well. I think I'm like up like 3 to 4 to 5%.
Okay.
But I'm down on all my other positions right now. But I still have faith. I basically just reallocated my yearly transfer to my Roth, and now I reinvested that amount of money into Disney. So we'll see how that goes. I mean, it's a long-term play. I mean, I can't withdraw money out of it until I'm like retired, right? So.
Yeah.
But when I withdraw money, you know, I don't have to pay any taxes on it at all. So
True.
hopefully I could grow my Roth into like a multi-million-dollar account. Then I don't have to pay any taxes on it, which would be great.
Yeah. Well, one of your positions, the Caesars
The short on the Caesar.
consortium.
Mhm.
Yeah, you're short. So according to this article, a Chinese consortium is buying out Caesar's online game segment for $4.4 billion. But I think you said that it's still not enough to cover Caesar's debts. So
Supposedly, no. But if they're willing to pay like $20 billion, then yeah, I need to reverse my position pronto.
well, I mean, where's it at right now?
I think the debt's at like $20 billion.
No, I mean like your positions from.
Oh, it's like
much-
7.
Okay,
So-
so are you still in the money or out?
I'm still in the money. Well, I'm doing a short. I'm not doing a put. So as long as I'm willing to pay the margin interest on it, then it's fine.
Oh, okay.
Yeah.
Investor sentiment, we're not going to worry about that. We're, in fact, taking that segment out. So, actually, that should have been titled the recommendations segment.
Nice.
Yeah, sorry. So, yeah, recommendations is this article from Investopedia about the pros and cons of owning rental property. So they talked about like some of the tax implications and like, you know, as a renter, what are some of your problems going to be? I mean, of course, you got like we said, tax implications. You got the fact that you have to worry about getting good tenants, whether or not they're going to squat in your property. But they also went into other things about, you know, the other advantages, like say types of deductions you can take out, or like say, what is it? Like say if you use your property only 2 weeks out of the year for yourself, you know, that's still possible. Or, you know, some other things. So you can go ahead and check out that article. I think it's really good. And that brings us to our end. Just a reminder, we may want to have another ship or other positions in the stocks mentioned on the show. Don't buy stocks based solely for this podcast, nor is your own homework and research for investing in stocks. All right. See you later.